afternoon, and thank you for joining us today at City Club's April 8th Friday Forum. I'm Sharon Van Sickle Robbins, President of the City Club, and I would like to welcome you all, those of you here with us today at the Governor Hotel, and those of you listening on OPB or KBPS radio or watching on Portland Community Media's CityNet 30. Today, our speaker, Karla Chambers, will describe some novel ideas for growing Oregon's private sector economy. But first, a few announcements. If you haven't already done so, you might want to silence your cell phones now. City Club's new Leaders Council is pleased to announce the development of a mentorship program which will pair two club members based on personal or professional interests in order to build new relationships and connect civically minded mentors and mentees across areas of interest, expertise, and experience. If you are interested in participating in the New Leaders Council's mentorship program, City Club staff member Amy Harris, who's standing at the back of the room, would be happy to talk to you with more information about this after the forum. Your gift to City Club's spring annual fund campaign supports these forums, events, and research reports that shape our community. Today's forum, for example, is part of City Club's series From Crisis to Opportunity, Exploring Solutions to Oregon's Fiscal Challenges. The events in this series are designed to explore innovative and long-term solutions to Oregon's fiscal crisis and are supported by our annual fund. To maximize our ability to produce these kinds of programs, we need to raise $25,000 over the next 2 months. So please consider making a generous contribution today using one of the envelopes on your table, or you can donate online at www.pdxcityclub.org. Last but certainly not least, I'd like to thank our media partners, including Oregon Business Magazine, and I'd also like to offer our appreciation to the Friday Forum corporate sponsors whose generous financial support make these City Club luncheons possible. Please join me in offering our sincere appreciation to this quarter's sponsors, communications firm Morel Inc., utility company Northwest Natural, and the law firms of Perkins Coie and Schwabe Williamson and Wyatt. We are very grateful for their support. If your company or firm would like to be a City Club sponsor, please contact City Club staff at the back of the room or call the City Club offices. And now to today's program. Growing the Oregon economy will require savvy and creative thinking and the drive to turn ideas into action. A healthy, vibrant private sector economy is essential to the state's long-term fiscal health and its ability to provide key public services. Today's speaker will assess Oregon's private sector economy and prioritize economic development strategies that Oregon should pursue to encourage businesses to relocate, grow, or invest in our state. Karla Chambers is co-owner and vice president of Stahlbush Island Farms, an environmentally friendly farm and food processor committed to sustainable agriculture. Karla received her Master of Arts from Oregon State University with emphasis on agricultural and resource economics, finance, and political science. After graduating, she served on the OSU faculty for 8 years. In addition to her position at Stahlbush Island Farms, Karla currently serves on the boards of the Ford Family Foundation and the Federal Reserve Bank of San Francisco. And now, please help me welcome today's speaker, Karla Chambers.
Well, thank you very much. It is a pleasure to be here to speak to the City Club of Portland. I was a little worried you might be getting pretty far down on your list if you needed to bring a farmer in as a speaker. But then I thought, well, maybe you've been going to the grocery store and you see what's happening with food prices and wanted to know what's up. So it's a pleasure to be here. Please understand today these comments are mine. I'm not speaking on behalf of the Federal Reserve. I likely won't fit anyone's label today. I am a business owner. My family owns businesses throughout Oregon in a number of counties. I think about monetary policy virtually every day. I've been with the Federal Reserve on committees or on boards 17 plus years. I just received wonderful note of thanks this week from the Nature Conservancy for our family's leadership in sustainability and environmental stewardship. I love the food business. I absolutely love the food business and the international markets we work in, as well as the domestic markets we work in. I attend our largest food shows around the country and internationally. I'm pretty sure you'll understand by the end of this discussion, I'm a fiscal conservative. I spend most of my days in the food markets and the stock markets and talking to customers, and yet I've been vice chairman of the Ford Family Foundation for 10 years, so I think extensively about charitable work and social needs. I'm a mother of 4. Our oldest son is in officer candidate school in Newport, Rhode Island as we speak. I've got 2 daughters at Cal Poly, San Luis Obispo, studying engineering and agribusiness, and our youngest son is a junior in high school. I'm a wife. My husband, Bill, is my partner in life, the love of my life, and I learned a year and a half ago I'm a professional artist. That is new news to me. I am in 6 fine arts galleries. I wasn't in any a year ago, December, but I'm in fine arts galleries on Union Square, Carmel, Puerto Vallarta, Mexico, etc. There's a lot of I can't figure out what I want to do in my life, or I've got some real diversified interests, and I will tell you the latter is probably the most true. Today's a pretty important day as we watch the media and we think about the government shutting down and having this discussion on federal deficits. And part of thinking about this speech today and about this economy, I want to go back about 130 years in time, because I think that's going to say a lot about how we go forward. I want to start by talking about food, oil, and fiber. 2 of Oregon's top 4 economies are in timber, forest products, and agriculture. And I want to talk about that natural resource economy. And primarily, I want to talk about what attracts wealth and capital for investment. I am an absolute firm believer, as I know many of you are, that you have to attract wealth and capital in order to attract jobs. Well, let's start with the food and energy markets and oil and ethanol. Food and corn and oil are more linked today than they've ever been in our 100-year time frame. At Stahlbush Island Farms, we're very focused on certified organic and certified sustainable and local markets, but I really want to talk about the broader food market today. And I want to go back on oil and remind us of the top 5 countries that we import oil from. 70% of our U.S. crude comes from Canada, Mexico, Saudi Arabia, Nigeria, and Venezuela. If we add the next 5 and look at our top 10 countries that import 90% of our U.S. crude, we add Iraq, Algeria, Colombia, Angola, and Brazil. Please let me remind us that 7 of these top 10 countries are not considered stable economic environments. I don't want us to lose sight of our dependency on oil and the economies in which that oil comes from. On the food markets, last Thursday, the USDA reported that corn inventories are down 15%. But corn plantings will only rise 5% this year. So what's wrong with that picture? Showed that farmers will plant 92.2 million acres of corn this year, the 2nd highest planted acreage in the United States since 1944, behind 93.5 million acres that were planted in 2007. Ethanol production and producers will consume 40% of the nation's corn crop this year, while the weak dollar and strong global demand from new markets abroad will substantially stimulate agricultural exports. We are in an unprecedented time where 2 and 3 of the last 100 years, we are seeing record ever commodity prices, where we have stretched that rubber band so tight because those drivers are in the Midwest associated with corn and soybeans. I looked at the soft white wheat market. Last week it was trading at $7.90 a bushel. This morning it's at $8.10 a bushel. Substantial impact on growers in western or in eastern Oregon. This week, China ordered closure of up to half of its dairies. 1,176 dairies have been forced into temporary closure due to food safety inspections. We're already seeing milk shortages, milk powder shortages in the US and New Zealand and Europe because the global demand outpaces global supply. Cattle prices, I don't know how many of you in Portland follow cattle prices, but in rural Oregon, 400-pound calves a year ago sold for $1.45 a pound. Today they're $1.80 a pound, 24% increase. Cull cows, 50 cents a pound a year ago, 85 cents a pound today. I will tell you, I don't think we know the full impact of the Japanese disaster, but our customers are calling and asking for more. We ship a lot of corn. Our company ships a lot of corn into the Japanese market. And we know they are asking for more help and more food associated with just a tremendous supply shock to their agricultural area. World sugar prices, record demand, 20-year high on prices and a 20-year low on inventory. We've never seen, record prices ever, 20-year low on inventory. Wall Street Journal last week said China's wheat imports will hit 1.4 million tons in the year to June 10, up 260%, but still on commodities, they only represent 1% to 2% of the world imports. Water and land scarcity and shortages are of primary concern. An economist yesterday from UCLA on CNBC, Matthew Kahn, said that China has invested $120 billion in their renewable energy last year, while the U.S. invested $20 billion in our renewable energy infrastructure last year, and that China will remain a substantial driver for U.S. companies in alternative energy. I absolutely agree with that comment. I also agree that China and India will be major players going forward in these food markets. I would say in summary, in 25 years of selling products, of selling agricultural products, I've never seen the global demand this tremendous. I've never said no, or I'm sold out, or I can't get it, or I'm sorry more than I have since last October talking to our customers on the ingredient side of our business, because we just can't get the sheer volume of food that's being demanded. 10% of China's population is moving from lower income to middle income. That's the size of the US population, and we know the first thing that people and populations demand as they move up in income is they demand more and better food. A weak US dollar, along with many weather and highly unusual events, a weak dollar really stimulates our exports, and in some markets we're 25 and 35% more competitive just because of the currency exchange. We've gone from a 10 to 15% blend in our ethanol, which requires going from 35 now to a record 40% of our US corn crop going into ethanol. A third of our US soybean crop went into China last year. India is now consuming US beef, thus record beef prices. Wheat is at $8.10 per bushel. I will tell you, growing up on a farm in Sherman County, I don't ever remember that. Crops are sold before they're planted. The first time in 25 years, we have waiting lists prior to planting these crops. But let me remind you, 2 of the last 3 years have been very strong record crops for the US. So we're not in a position of counting on record yields, record acres, and record crops going forward. There's a fundamental shift in the demand curve for agricultural production. So where's Oregon's opportunity in this? I started by saying 2 of our top 4 industries were in agriculture and timber, producing food, fiber, timber products. We grow 250 agricultural crops, more than 250 agricultural crops in the Willamette Valley and throughout Oregon. The Willamette Valley is one of the richest, most diverse, rich soil microclimates in the world. We sell crops outside our borders. 90% of our crops go outside our borders because we don't have the population in Oregon to consume what we can produce. Corn and oil are now linked. This should be a strong trend for some time. It's very, very good for rural Oregon. Land prices are up, wheat prices are up, and certainly that's healthy for rural Oregon. I will tell you the Fed is absolutely watching food and oil inflation and how that spills over into core inflation. But one thing that's unique about our economy is we spend as little as a percentage of our net income on food as any population in the world. So it's those populations that spend 50 and 60 and 70% of their net income on food. That's where you will immediately see social unrest attributed to high food prices. Oregon, Washington, California, the Pacific Northwest, we're rich in natural resources. We're sitting on the Pacific Rim. We're traditionally a non-subsidized player in agriculture. You've got the big 7 crops and commodities that are traditionally subsidized. We are not. We are part of that non-subsidized group, typically in production agriculture. Asia will continue to need more and higher quality, better food and fiber. India is now a major importer of food. Water, food, and fiber will see increasing global demand as we gain on 7 billion people on this planet. China and India have the fastest rising middle class, and again, the first thing they will demand is more and better food. 70% of our ground in North America will change hands by the year 2025. There will be a continued increase for organic and natural foods. 80% of Americans are now 2 generations from the farm and ranch. Water and oil will see increased pressure and demand, and women will become major landowners and already are. On land use, I would highly suggest we think about drawing a circle around our most highly productive Class 1 soils and not draw a circle around our cities. We know for sure we will only expand that. We know for sure we will only expand that circle in time, so let's be sure we're protecting those Class 1s, those best soils possible, and make those marginal soils available for development. So let me regress and drop back 130 years. And how do we benefit from these global opportunities looking back and then looking forward? I grew up on a ranch in Sherman County. That's Sherman County, for those of you that don't know. You have the John Day River to the east, the Deschutes River to the west, the Columbia River to the north. If you're ever at Shears Bridge, my grandmother's first cousin was Joseph Shear. My family's been around a little while. Our closest neighbor growing up was 4 miles away. Our closest grocery store and doctor was 64 miles away, and I was 24 miles from my high school, Sherman County High School. The ranch has been in my family for 130 years. I was the keynote speaker at the Mid-Columbia Co-op, where 280 wheat ranchers gathered this last fall. And I went up and I told them how proud of them I am. I said, you know, you're landowners, you're successful businesses, you're successful families. We've gone from 90% of our population living on the farm to less than 1% of us, and you have succeeded. You have a place at the table because you have understood for 130 years the true correlation between debt and leverage. You've been in a low-margin business for 130 years, and you're here because you understand debt and leverage. I grew up in a German farm colony. So my great-grandfather homesteaded up there because Shaniko was one of the largest wool shipping ports in the world, and we exported lamb and wool. But these are families. My maiden name is von Borstel, and there were the Shadowitzes and the Aikens and the Bibbies and the Buthers. 130 years later, every single one of these families are still up there farming. While the business has changed away from sheep and then into wheat and cattle, and now predominantly wheat, these families survived because they understood how much debt they could take on in the good years and be able to still pay it off and cover that leverage in the lean years. And I would say it's a gift for me, a great foundation for my life. It's also a foundation for how Bill and I run our operation today. And I know it protects us and it protects our employees. So why is that concept important, and why do I bring that up today? I bring it up today because there's a frozen hose theory in economics. And there's this basic theory of why North America developed at a faster pace than South America. And one of the concepts was any place where the hoses froze in the winter, it forced a preservation of the food supply. People had to can, they had to think about the winter or they would starve. That concept forced the notion of savings and capital formation, and out of that notion of savings and capital, capital was available for investment. Well, on the household level today, that still correlates. I have a lot of get real thinking in some of my food talks, and I think as a society, we really need to get real on this notion of investment and capital as we think about Oregon's economic advantage going forward. What is Oregon's economic advantage? What competitive advantage will we have in these global markets going forward? And how do we manage the precious resources that come into our care? At Stahlbush, we've done that. We were the first farm to be certified sustainable by the Food Alliance. We brought new packaging that was 100% biodegradable to the freezer section. 3 years ago, we built a biogas facility, and we produce 100% of our electricity, more than what we need or enough for 1,100 homes out of our corn cob waste, our silage, our fruit and vegetable waste from our food processing. We produce more electricity than we use, 100% of it out of our waste streams. We're trying to utilize underutilized resources and capture value at every part of our business. And we're also trying to create premium value in niche markets. In Sherman County, at the county level, might be the only county that gave every citizen in the county a rebate check the last 2 years. If you live in the county, you got a $590 rebate check because they're running a surplus. The taxes actually went down $1,000 on our family ranch and I think that's pretty unheard of. This is a conservative little county. They invested in wind energy, which if any of you have visited Sherman County will understand that's clearly a renewable resource 365 days of the year. They're well-financed, they're conservative, they grow wheat, they've kept their overhead costs low, their land prices are now high, their wheat prices are high. We might argue that the state has over-subsidized wind projects, but the county took advantage of their natural resource advantage, and their taxes are now lower, and the citizens are obtaining rebates. My point is there's lots of opportunity everywhere I look in oil, food, fiber, water, natural resources. Honestly, this feels like the Wild West in the food markets. Substantially more opportunity than we can supply on the demand side. So how do we get Oregon's house in order to how do we get Oregon's financial house in order to take advantage of this? One of the most interesting things I think I have learned in the last 5 to 10 years was on the Indonesia tsunami. I don't know how many of you saw the National Geographic came in and they interviewed the fishermen. And I don't know if you saw these pictures, but these were fishing tribes. These were men with no clothes other than a rag and a spear. They were fishermen. And they knew to run away from the water. They knew to run to high ground, as did the cats and the dogs. And yet, by our standards, the most educated among us ran to the sea. Some of the most educated among us ran to the sea to their death. and they didn't know what to do in that situation. And I would ask ourselves as a culture, what are our stories that we are passing down from generation to generation? Are we passing along a culture of savings and investment through our stories, or are we just passing along a culture of spending, consumption, and entitlement? And I think we need to stand back. I firmly believe that wealth, capital, and savings create jobs and opportunity, and I think we need to think about these stories and this frozen hose theory for savings and investment in the future and preservation and sustainability of our natural resources. So how does Oregon grow these private sector jobs? I interviewed 10 to 20 attorneys that focus on business deals. I interviewed CPAs and I interviewed entrepreneurs getting ready for this talk. I talked to bank owners, manufacturers, food processors, a man who owns a trailer company, forest products and timber folks, talked to farmers, I talked to the high-tech industry, talked to car dealers, and I interviewed our local business dean. In the 10 to 20 interviews, one major theme easily surfaced to the top. And it was, we need to change our income tax structure where we are driving wealth outside the state's borders. Without exception, these people told me that is the #1 thing that needs to change in Oregon. When 66 and 67 came onto the ballot, Oregon Business Magazine interviewed 697 of their readers. 52% said 66 and 67 would hurt Oregon's economy. 63% said it would hurt Oregon's ability to recruit new business. 41% said it would hurt the organization that they work for. As I talked to these business lawyers and CPAs and entrepreneurs, without exception, they told me they know of 5 people, they know of 10 people, they know of 12 people, they know of 20 wealthy, high-income individuals that have left our borders for different reasons, but the same basic problem. They're definitely going to leave the state or become a citizen of the state of Washington or the state of Nevada if they plan on selling their business within the next 3 years. We've got a 50-year-old company starting a finance business, a finance company in Boise, Idaho. We've got one of our major CEOs of a high-tech firm in the Valley living in Vancouver, Washington. We've got Oregon businesses growing their business outside of the state of Oregon or growing their inventories outside of the state of Oregon. We've got defector trusts getting set up in the state of Nevada. 2 attorneys said, I'm not sure there's the volume of business deals for me to practice in Oregon in the future. I think we very much need to come in, challenge ourselves, and look at where our high-income earners, our wealth, and where our wealth is in this state, and are we losing that to the state of Washington? Are we losing that to the state of Nevada? And I think we should fund a study with Oregon State University and track where our millionaires are going. I'm a firm believer in asking my customers for feedback. If I want to know how I'm doing or our company is doing, I'm a firm believer in asking the question of others, and I think we need to do that same thing of our businesses. I also employ us to realize that Oregon is a small business state. Of the 107,802 employer firms in Oregon, 98% of them are small business. 98% have 99 or fewer employees, 96% have 49 or fewer employees, 90% have 19 or fewer employees, and 80% have 9 or fewer employees. Those numbers came from our Dean of Business at Oregon State University. These business owners will tell you that Oregon's overhead is too high and our regulatory burden is too great. As we look at our unemployment numbers, and we have lagged in unemployment in Oregon for a number of years. The national unemployment rate as of yesterday was 8.8%. Ours is still up at 10.2%. That's not a lot to be proud of when we consider full employment at 5%. I think we need to be really thoughtful for those and on behalf of those that are unemployed in this state and say, how do we create those jobs going forward? Number one, I think Oregon has got to stop the flow of capital outside our state, specifically flowing into Washington. I was going to suggest to the governor on that new bridge, we might make it just one way. And invite those Oregonians back to Oregon, but let's be really clear on what policy that might take to do that. We need to attract that capital because we know capital and jobs go together. We need to recruit California businesses. We need to encourage Oregon businesses to grow and expand their business here, not outside our borders. And we need to remind ourselves that capital and wealth and jobs go together. And certainly we need to keep those business families here that have been entrepreneurial in our state for 50+ years. So let's talk to those exiting businesses. Let's talk to those people who have left. Let's track those millionaires and understand where our wealth is migrating to, and let's change the incentives for investment. I could not be more optimistic being an agricultural economist and being in the food business. But I think we need to understand how easily capital moves and relocates if that risk environment is too high. We need to understand how entrepreneurs think. And trust me, I sleep with one every night. My family for 130 years and my husband's family for 90 years, we've only ever worked for ourselves. Our friends, our families, they are all entrepreneurs. They love what they do, but it also has to be fun. When we have state and federal agencies that tax, fee, and fine to increase their revenue base, trust me, that highly demotivates entrepreneurs. They believe and want strong, reliable audits from knowledgeable people, but repetition makes no sense to them. They see the opportunity, they can create the jobs, but we have to have the right environment. We have to have the right environment to attract their wealth. Finally, I interviewed the president of the San Francisco Federal Reserve Board, and I thought in light of today's discussions, I wanted a comment from him on the US federal debt. And I know you're all watching the news today on whether the government's going to shut down. He said the US federal debt held by the public is currently about $9 trillion, or 62% of GDP. Without major legislative changes, the Congressional Budget Office projects that debt held by the public will hit 90% of GDP by 2020, and it will reach 150% by 2030. Now that's just 8.5 and 18 years away. By comparison, publicly held federal debt peaked at 109% of GDP after World War II. In 2010, net government debt as a percent of GDP was 114% for Japan, 103% for Italy, and 97% for Greece. And I think we all know how that worked for Greece. Although it is difficult to pin down the tipping point for the level of public debt at which financial markets will lose confidence in the ability of the US government to repay, it is clear that the projected US public debt is on a very unsustainable long-run trajectory. These growing burdens are largely driven by the aging of the population and rapidly rising healthcare costs, which underlie the underfunded federal liabilities in entitlement programs. Why are we as a society so unable to deal with these major problems, and why do we keep kicking the can down the road? I think as a society we have to answer that question. So I went back 28 years. 28 years ago, Alan Greenspan walks into Reagan's office. This is October 13th, Wednesday, October 13th, 1982. Alan Greenspan was completely unheard of. He was chairing the Social Security Commission. They're in the treaty room with the several cabinet members, and Greenspan said, "We've put the figures together and Social Security is a disaster beyond our worst imagination." That December, he comes back and says, "We're making the dent. We are not making the dent in spending we should, but the biggest bundle of spending is Social Security, Medicare, and pensions." That was 28 years ago. In Alan Greenspan's book, 18 years ago, February 17th, Clinton is elected president. Clinton had wanted to cut taxes on the middle class, have the federal deficit, stimulate job growth, increase U.S. competitiveness through education and training, and invest in the nation's infrastructure. Greenspan said from the Fed's perspective, if he wanted to address the economy's long-term health, the deficit was the far most pressing issue. This was 18 years ago. He made that argument in front of Bush, and now the problem was 4 years worse. The national debt held by the public has risen to $3 trillion, causing interest payments to become the third largest federal expense after Social Security and defense. That was 18 years ago and 28 years ago. Today, we're about to shut the government down over the exact same problem we didn't deal with over the last 18, the last 28, the last 38 years and on. I think we as a society have to ask ourselves, how do we change our culture so we just quit kicking these problems down the road? We will always have bubbles and crises and cycles. How do we prepare for the future? How do we save and prepare for the next down cycle? Or do we spend every last dollar of revenue that we can tax, fee, or fine? If you go back and read these from writings from Volcker, Greenspan, and Bernanke, they have all made it abundantly clear we must deal with this federal deficit and debt. These congressional talks are likely the most important discussions we will have as a society over the next 10, 20, and 40 years. This stuff really matters. If left alone, the mountains of debt will weaken our dollar, encourage inflation, increase interest rates, and ultimately send our future wealth abroad to the people from whom we borrow. In my time with the Fed, and a little earlier since I've really been paying attention, in 1988 we watched that Dow where it was 2,000. 94 to 96 it moved from 4 to 5,000. In October 96 it broke 6,000. In 07 it broke 14,000, fell back to 5,800. Today it's on the doorstep of 12,400. I'm pretty sure we will continue to see real cycles with the Dow. We had a brutal recession in the early 80s, a real estate boom in the early 80s, a boom and bust, Black Monday in 1987, a savings and loan crisis, a high-tech bubble, Y2K, 9/11, an Enron bankruptcy and WorldCom, and a subprime housing crisis. I'm pretty sure we will continue to have bubbles and cycles. The question becomes, is how prepared are we as a society for the downturn? How prepared are we, and how well do we understand debt and leverage? The ratio today of household debt to disposable income is 125%. We're not too prepared for the downturn. Bill Gates said recently, he said, we're now spending 17.8% of our GDP on healthcare. It's just mind-numbing. My final thought is a Keynesian theory of economics. And in the Keynesian theory of economics, they talk about interest rates and making investments based on profit. We make investments based on our ability to create a profit. And at times, if that risk profile is too high, it doesn't matter what the interest rate is, that investment won't be made. I think the business uncertainty and the environment going forward is the most important thing we can tackle at our state level and at our federal level to stimulate long-term investment going forward. And I hope you will invite me back, maybe in 10 years or 25 years, because I think the story 10 years from now or 25 years from now is how well did we prepare for that tsunami? Are we going to run toward the sea? That didn't work out so well. Or are we going to move to higher ground in this economy and truly, genuinely prepare for that economic future that we want our grandkids to have? And with that, I will thank you so much for listening to and considering my thoughts, and I will be happy to take questions.
Thank you. Our first question for our speaker, as always, will be from our Friday Forum host, and our host today is City Club Governor Barnes Ellis. Barnes is the General Counsel for Mercy Corps and a partner at Stoll Reeves. He previously served as a member of the City Club Board of Governors in the 1970s and has served on 2 City Club study committees relating to city governance. Barnes?
Karla, thank you very much. That was really interesting. You touched on this, but I want to give you a little more chance to flesh it out. From both a short-term and a long-term point of view, both positive and negative, what do you see as the likely impacts of the Japanese tsunami on the Oregon economy?
I think that is a really thoughtful question, and our firm has given to the Red Cross in Japan, and I would really encourage those of you to think about that. It has been really heart-wrenching knowing people, and I will tell you, I think that situation is far worse than what the media has even picked up on. We have customers who have literally lived in their offices because they will ride the trains an hour and a half south into Tokyo and an hour and a half, 2 hours north, back home. And not only have they lost families, but the trains don't work. And this has really, really shattered confidence beyond belief. They will need our help on food supply. I don't think we can really define at this point how much help they will need from this culture, but it is substantial, and it's far beyond food. I think their biggest challenge in talking to them is just their sheer loss of confidence. Also, please study their debt burden and really being able to now have to re-engineer and rebuild an economy and their sheer ability to do that financially. I mean, if there was ever a wake-up call of preparing for the future, I'm not sure we're prepared for, what they're dealing with. Good question.
We will now take questions from the floor. Asking questions at City Club Friday Forums is a privilege of membership. Before asking your question, please identify yourself as a City Club member and ask your questions in 30 seconds or less. If I flash my question mark card, it means that we're waiting for that question.
Ms. Chambers, first-rate speech, first-rate preparation. We really appreciate that. I know I do. But let me ask you a little tougher question. Our economy is about $66 trillion in size, give or take. We're about $14 trillion in our overall production per year. We lost something like $10 trillion in the Great Recession. Part of that failure lay in, at least in my judgment, after reading the Financial Crisis Inquiry Commission's report, part of that lay firmly in the Fed's failure to regulate properly holding companies.
Yep.
What's the Fed going to do about too big to fail?
I think that is an outstanding question, and there is no question, there was failure throughout the Fed and in many camps on the regulatory front. And reading the tea leaves and seeing that, I will tell you, there were 8 regulators in the state of California that were there to reach out and touch those mortgage brokers as those very deals were being put together. But I will also tell you, and I want to step back from that just a little bit, we are heavily regulated today in food, and banking is even more heavily regulated. And I would employ us to rethink our regulatory processes. So I brought the toughest, I see these problems as identical. And what we're doing to businesses and banks is identical. And this is my opinion and my observation as being a founder of a bank and running a food processing entity. We want the absolute toughest regulatory audit that we can go through at Stahlbush Island Farms. And it is a 5-day intensive audit where they know more about our company than I know at the end of the day. We score virtually 99% out of 100 on this audit, and as an ingredient supplier to 350 companies globally, 100% of them recognize this audit. So our goal as a food company and our goal as a bank mindset on the regulatory front should be to find the absolute toughest, best audit we can sit through it and pass it well. What's going on, however, here are the 3 government audits that I also sit through, and that doesn't include the endless other audits. We probably sit through 10 or 15 audits. To come in and check the same box over and over and over and over again takes up precious time and resources of those managers trying to manage that bank or trying to manage that company. We're not helping ourselves through repetitive audit, and we're missing important links. And I would say on food safety, the difference is we kill people. On banking, we just put them into debt for a longer period of time. But I think we're failing, this is my personal opinion, I think we are failing on that regulatory front when we're tying up those management teams over repetitive behavior and poor performing audits.
My name is Steve Katz, and I'm a member of the City Club. And I'd really like to tell you I appreciate your adult conversation. We need more of that. And I would like you to, on a national level, and I would like you to comment on the entitlement issue and the Social Security Trust Fund that I'm not too sure I understand. And my second lead-up question to that is, how would you encourage people to save more?
Well, this will probably be the mom and me talking, but I've been pretty clear with my kids. You know, you be prepared to take care of yourself. Think about your own future. Think about your own savings. Because the only thing I know for sure is your taxes are going to be likely go up substantially, you know, to pay for generations ahead of you. And I think we're at a place where we fundamentally can't kick the can down the road any farther. As we look at the drivers of our federal budget and we look at these federal deficits, it's these entitlement programs of Social Security, of Medicare, of the interest on the federal debt, of health care. We absolutely are on an unsustainable path. I would like to sit here as a business owner and say that won't affect my taxes going forward, but we all know better than that. The problem with that, however, is every small business, like my husband and I, we look at our net profits at the end of every year. And what do we do with our net profits? We invest in expansion, which is what creates the new jobs. We pay off our debt. We pre-fund our estate tax, which a lot of businesses don't do. We need cash to grow our inventories going forward. So the fact of the matter is the government's competing with us on the very same dollars they want, that they also want to create jobs. we're talking about the same dollars. So you can tax me at 100%. Honestly, you can. I mean, this isn't an emotional issue for me. You can tax me at 100%. You just can't expect me to create jobs if you do that, because I need that capital for reinvestment in the business. I need that capital going forward. Profits are good. We need to be teaching our kids that. It's not a bad word. It may be a bad word in business school. It's not a bad word. We need wealth, we need capital, and we need that available for investment to create the very jobs to employ these people.
Chris Andre, City Club member, KBOO programmer. Before I ask my question, I just want to remark that Volker, Bernanke, and Greenspan, I believe, are, if not all three, I know at least two, are alumni of Goldman Sachs, the architects of the disaster, who, by rights, if they were paid based on performance, would be in some serious trouble right now. Given that the banks are still sitting on vast cash reserves, and that enormous amount of the wealth of the country is concentrated at the very top 1%, we are globally alongside Iran and one other country as far as the gap in the distribution of wealth. And I'm not, this isn't socialism or redistribution of wealth. I myself am instrumental in managing an investment fund. So, don't get me wrong there. But it seems to me that all the wailing and gnashing of teeth over the deficit, what about this huge gap in income, the very wealthy and everyone else? It's recipe for disaster.
I would say keep in mind that the Fed is not the fiscal agent and doesn't create the U.S. budget. And so those budget deficits, we're not establishing the budget, we're not setting the budget. We set monetary policy, and we have a handful of tools to do that. I don't think that a downside of the economy creates wealth. It will only further the distribution of wealth at the top and the bottom. So job creation, when Bill and I started our business 25 years ago, we had 2 employees, and we owned a farm. And these employees had no benefits, they had no vacation, they had no health insurance, dental insurance, retirement program. They didn't have any of that because we couldn't afford it. It was only through success of the company and profits do they now have every one of those things. So I don't know how to create wealth for the average US citizen if they don't have a job. I don't know how to create benefits if I'm not creating profits. I do know that an unemployed person doesn't have the opportunity for anything but more negative days ahead if they don't have a job. And I think every small business owner, sure, at the bottom end you have some bad players, but every small business owner out there knows they need to protect their employees and hopefully improve their lives going forward. Certainly we feel that way.
Leslie Moorhead, City Club member and Secretary of the Board of Governors. Karla, you talked about federally subsidized agriculture and the fact that Oregon is not in that group. We're non-subsidized out here. But I'm originally from Iowa, and I have farm families, relatives who are farm families, so I kind of pay attention to this. Would you talk about federally subsidized agriculture in terms of the purpose of it and also the future of it?
Yeah, I am. When you've got the big commodities like wheat, corn, dairy, some of those big drivers out of the Midwest, a little bit in the Northwest, there's 7 basic commodities that are typically subsidized. We have been subsidized on the biogas plant. And I'm a firm believer, when Bill brought this biogas plant over, all of that technology came out of Europe. It was all in the metric system. It was the first technology of its type to come into North America. you'd see these biogas plants on dairies, but this is the first technology of its type in North America. That first one is really, really expensive. The next 10 are a lot less expensive. Those are the ones you want to subsidize, in my opinion, because that's how you get new technology abroad. That's how you get it here. You help those risk takers take that risk to do it. Subsidizing industries over the long run, however, I think weakens the industry, and I'm not a proponent of that. Now, how will these subsidies fare in Congress? Trust me, we're having the little picture discussion, not the big one in Congress right now. So your guess is as good as mine. We are not having a serious conversation in Congress right now on how we're going to deal with these deficits, but I pretty much know we are all going to give something up if we have the right discussion and the true discussion that needs to be had.
Virginia Cornyn, City Club member. I've been in Oregon a little less than 4 years, and clearly you and your family have been here a great deal longer. One of my observations is coming back to the Oregon question around the Oregon economy is that Oregon is perceived as, and in many parts I believe believes itself as not being particularly business friendly. How do we, and do you have advice for the state and for those of us who don't live in Sherman County, where clearly there is a very strong business culture? How do we help educate the state as to the messages you've been delivering today in terms of the importance of business as a piece of the overall local economy and hopefully raise all boats?
You know, that is such a thoughtful question, and the Middle East is fascinating to me right now. I mean, you hand everybody a cell phone and you can topple governments, right? I mean, we're seeing that in real time. Government doesn't hear from people who don't want anything. That's part of our fundamental problem. They hear from the lobbyists and the people that want something. They need to hear from us. I mean, if we truly, truly believe that dealing with these structural deficits is important to our future, get that cell phone out and talk to your state representative and to your U.S. congressman and your senator. I mean, I fundamentally believe this is one of the most important conversations we are going to have as a society over the next 30 and 50 years. We're so backed into the corner, we really have to get it right. So it's thoughtful, and I think that our politicians need to hear from those of us who generally don't speak, because we're not asking for anything. And what we need to ask for is that business-friendly environment that allows our businesses to exceed going forward. I also think we're in dangerous territory. If you've ever worked for an organization where it becomes more important to take care of the organization and they lose sight of their customers, you ought to leave, because it's only a matter of time that you're in really dangerous territory. It should not be about just sustaining government. I mean, this should be a partnership. There are 42 state, federal, and local entities that fee, fine, tax, or tell me what to do. I mean, I think that's enough. And I try to be a pretty good player. But there's only, you know, the world isn't perfect. And there are no perfect businesses. And you add biological processes to this, you know, society isn't perfect. We need to be flexible. But just sustaining government at a size that's no longer relevant to the size of the economy, we have to have some serious discussions. So please get that cell phone out and let's talk to our representatives if this is important to you.
Mike Litt, City Club member. I agree with you that our entitlements, particularly the medical field, are not sustainable. I wonder if you're familiar with Governor Kitzhaber's ideas on how to change this around and what you think of these.
Yeah, I just saw, that's just been published a little bit in the paper, and I will tell you quite honestly, I haven't studied it, so I'm not going to comment. But I'm pretty sure that, you know, the sheer amount we're spending on healthcare needs to be rethought, and certainly on the preventative end and how we take better care of ourselves on the front end of this equation, not on the back end, I'm guessing has a pretty great amount to do with our success. I think also it's pretty clear how much money we put in the last 3 weeks of life. We probably really need to think harder about the preventative end of our equation. The economist in me says that, but I'm sorry, I haven't studied it.
Linda Peters, City Club member. I was hoping to hear from you something about the possibility of using something other than the traditional capitalist business model as a basis for trying to make the most of our natural resources. I am delighted to hear you say that we should draw a line protecting our most productive farmland. I completely agree with that. But something that seems to be happening in a lot of places these days is more collaborative efforts to develop sustainable farming and local food networks and so on. Though there are things that government can do to encourage that kind of small-scale economic activity that is going to be perhaps in the future a lot more beneficial to a lot of ordinary residents than maybe to the larger companies and their leadership. So much of what happens, as you were saying, people who want something are the ones that go to government. Well, a lot of them are very rich people running very big companies, and what they want are more breaks. I wonder if you've given any thought to the kind of partnership that might go on between communities and their governments in order to better develop our resources for everyone's benefit, not just the wealthy who are in control of large organizations.
You know, with the Ford Family Foundation, we were very involved in Lakeview, Oregon, on the big energy plant that's locating in Lakeview. And, you know, there's clearly a role for community collaboration, for involvement, but we also, as a foundation, clearly sort out our role in the private versus the public sector and the charitable sector. But you know, at the end of the day, looking at 22 economies around the world that we do business with, you know, I come back to observing socialist systems and certainly dictatorships. Capitalism isn't perfect, but it's certainly better than anything I've seen out there. And at the end of the day, it's the system we have, and we need to improve it. We need to keep working with it. And I'm a big believer that individuals can be terrific job creators, terrific generators of wealth if given that opportunity. I am not a believer that governments are good at doing that. I think they're very inefficient at distribution of wealth and finding those opportunities. No greater example do I think we've seen other than going to the Ukraine. The Ukraine is one of the richest, most natural resource rich environments I have ever seen, and it has more potential. And yet you look at this boom, and yet at this very time when a country like that should see, you know, more economic power than ever, it's the very government that's held it back. And so I think it comes down to a basic philosophy on how wealth is created and how it's distributed, and who can truly employ that and create jobs. And I'm going to put my bet with that private sector. Is it perfect? No. Is it the best I've seen? Yes. Thank you very much.
We've run out of time for further questions today, and we'll have to stop. Join us next week for a talk by Portland Police Bureau Chief Michael Reese. As we close, please join me again in expressing our appreciation to today's speaker, Karla Chambers. Thank you so much. We're adjourned.